So the Fed said they will do everything in their power to bring the economy down, right? So we have the market puking. We have companies trying to start being more aggressive into saving costs. We have layoff that may come up. We have a bunch of uncertainty and fear out there. We have noise around China invading Taiwan. We have coronavirus again spiking because we're getting into the winter season. We have a bunch of stuff happening out there which are weighing into the market selling off because people are really uncertain about what is happening. All right. Now, that being said, it is clear that because of the Fed trying to break the economy to bring inflation down, this is not good. This is not good at all. Now, as an investor or as a trader or as somebody who is willing to start his investment portfolio or just make sure you protect your money, there are some stocks, there are some type of stocks or assets that you need to hold or park your money into if you want to at least minimize the shock or just protect your money or just get a little bit of positive cash flow while we wait for the recession fears to ease up and for inflation to bring down to come down, for the market to start going back up again on a bull run. Now, in this video, I'm going to walk you through 4 or 5 of these assets that you can start buying now in order to go through these hard times the Fed might bring the US economy, into, so that you don't lose a ton of money. The first thing is the financials. All right. The financials is that type of, if you buy the financial stocks, the Bank of America, the JP Morgan Chase, the Goldman Sachs, the Merrill Lynch, but also some of the less known big banks, as what we call the regional banks, Texas Bank for those in Texas, or in South Carolina, you have banks that are just, regionally located. Those are some of the assets that will help you maneuver, times that are coming because of the interest rates increasing. Whenever interest rate increase, the banks tend to make a lot more money because they issue credit cards, they issue and collect those interests with people paying by borrowing money from them. So that's number one. Number two is what we call the utilities. Utilities are those companies that no matter what, whether we are on up economy going up, economy going down, these are the stuff that we are still buying because these are necessities. These are essentials. These are stuff we just can't live without. And those companies offering those services and products are what you call utilities. These are the Dollar Generals. These are your Walmart. These are your Targets. These are your, center points for energy. These are the company from your electricity provider. These are the companies that are called utility. Why? Because as people are trying to save costs, as the economy is going into a recession, maybe whether it's deep or not, companies tend to not make that much profit, and that's why the stock price tend to decrease, because people don't want to remain invested in a company that is not making money, and that's why they're pulling money and the stock price is tanking. But these, even if they're not making a ton of profit, at least they're not losing money because they have the volume. They have people that are still buying products and services from them on a daily basis. And lately, we have Dollar General, or Dollar Tree beating the Target, the Walmart, the Ross, just based on the fact that people with high prices and inflation are now shifting to those type of stores, even people making 6 figures, because life is getting hard. All right. So that's number 2. Number 3 is your healthcare. Again, healthcare, part of the utility, offers some that kind of a protection if you want to make sure your money is not losing value because of the economy going down based on what the Federal Reserve is going to do. And then finally, number 4, if you want to take a little bit of risk, I will call on the energy, but energy will be really short term or not, what I should say, like, you need to be hands-on, because energy has something to do with geopolitics, and that's something you can control. So sometimes energy will be up, sometimes it will be down, but when it's up, it's up big time. But when it's down, it's also down big time. So this is also a sector I will consider as we get into, the winter season all the way up to January, February, right? And then finally, the bonds, the I bonds. I mentioned this on this channel a couple of times. The I bonds are what we call the inflation bonds. These are bonds that will pay you the exact interest rate amount that is equivalent to the inflation rate. So right now, inflation is around 8.6%. 8.3%. It used to be 9.6% just a couple of months ago. So that is what the I bond will pay you because as interest if you invest $10,000, which is the minimum or the maximum you can invest into those I bond per person. All right, so 10,000, you need to hold it at least for a year, but you will get 9.6, or whatever the inflation rate is at that time, on that inflation bond, pretty much indefinitely. So these are the assets that I do see people will start to flock into, just because, as I mentioned, they help protect your money as, uncertainty is ahead of time. So if you find some luck, if you find this interesting, please consider giving me a thumbs up and adding and subscribing to the channel if not. And if you have any other sector I didn't consider, please drop me a comment section below.